Happy New Week, guys. This is the outlook video for the last week of March 27 to 31, 2023. So this is DXY chart. We're looking at the weekly time frame. Okay. So as you guys might have already known, I like to do my analysis from the weekly down to the lower time frame. Okay. So um last week I mentioned that if we get a daily close below this area in price, okay, I had an initial bullish bias for last week and I mentioned this area as my validation point. That if we get a daily close below here, then it is more likely to drop lower into this fair value gap, this weekly fair value gap, and perhaps into this volume imbalance. Okay, it dropped into the weekly fair value gap but failed to drop. I'll show you. Let me go to the daily time frame so that's understand what I'm saying. So I was drawing attention into this area last week that if we, because of this impulsive move that we had there, I had an initial bullish bias for the week last week, and I mentioned that if we get a daily close below this area in price, that it is more likely going to drop lower into this fair value gap and perhaps into this volume imbalance. Okay, so last week on Monday, this is Monday's candle, we got a close below it, and on Tuesday it uses as resistance to drop lower into the fair value gap and into this BPR. Okay, this one is an area in price that only buy side was provided, and then here sell side was provided, and then we got this reaction from it. Okay, so the volume imbalance has not been traded into. Okay, if assuming the volume imbalance here had been traded into prior to this move, I would be anticipating higher prices. Okay, but because this volume imbalance is still here, and I don't think price would come this close without drawing into it. I don't think so. So I would assume that this short-term low here is potentially an inducement, okay, a liquidity inducement. So I'm still anticipating that price is likely still going to drop into this volume imbalance before we may then see reversal. Okay, so I'm anticipating the weekly Judas swing to the downside into this volume imbalance, or we might just consolidate for the most part of the week and then manipulation down into this volume imbalance before we then see reversal. Now, in case you haven't seen something, the market is generally always moving from buy model to sell model to buy model to sell model continuously. Okay, so what we have here is a market maker buy model. Okay, we have the initial consolidation here, running to support, smart money reversal when we broke above this short-term high, low risk buy, reaccumulation, and then offsets distribution above this high. Okay, so what we also have here is a market maker sell profile. Sometimes it can be really difficult to see when it is playing out, but after it had already played out, it's much easier for you to see it. Okay, so this can either be the terminus or this. Okay, if this is a, of course, this is a market maker sell profile. All right, we had initial consolidation here, run into an area of resistance, rejection block, and we had smart money reversal when price broke below this low, and a low risk sell inside of this fair value gap. So assuming that we're going to have the second leg of distribution into this volume imbalance. Okay, so I'm looking at something like this. it could maybe use this area as resistance, and it doesn't have to. Okay, it can just sell off from here. So this is what I'm looking at into this volume imbalance, and then long term. Okay, I'm not sure all of this will happen this week, but long term, this is what I'm looking at. Okay, however, this low could also be the terminus. Okay, this could be initial consolidation run into an area of resistance, smart money reversal, low risk sell, distribution, and then offsets accumulation below this low. Okay, but the reason why I'm not anticipating that this low would be taken is because of this bullish OB. Okay, this is a bullish OB. Ideally, you wouldn't want to see price breach the main threshold of the OB. Okay, if you check, let me measure the main threshold. So the main threshold of the OB is just below the volume imbalance here. Okay, it's just below the volume imbalance. So um ideally we would not want to see price breach the main threshold. Like, we don't want to see it close below it. We don't want to see even price pierce. It could pierce through, right? But ideally, you want to see even price move away from this area. I don't want to see price come too deep into the main threshold, even though that does not invalidate the bullish OB. But the better OBs generally, you don't want to see price breach the main threshold of the OB. Okay, so that's why I am skeptical that this low is likely not going to be taken. Okay, and also because we have seen the accumulation for the year, we've seen manipulation, and then we've seen expansion. So ideally, price should not even be coming here at all, right? So the way I see this, if we should draw the, let me change this. If we draw the fib here, and change. Yeah, so if we draw a fib from here to here, this is OTE. Okay, this area in price is OTE. Right, optimal trade entry. This is 618.072.076. So we could still drop lower into this area, and then we see a reaction that will kickstart a market maker buy model to into this volume imbalance and perhaps this high. I think this high is likely going to be taken. Okay, I think this high is likely going to be taken. Generally, from a, if you go to the weekly time frame, let me, why am I bullish? Okay, why am I'm bullish long term on DXY. Okay, and the reason is because um I think I've showed you guys from, let me see if I can pull up the COT reports. Okay, so this is the COT report. We see that if you look at British pound, you see that all through the rally, okay, all through the rally, they kept on removing from their longs. Okay, you can see that their net position had been reducing. Okay, when you are seeing a decline from positive to less positive numbers, that means they are removing their longs and building short position. Okay, so if more short position is added to, let's say, this 25,000, the value will reduce. If more long position is added, the value will increase if it is a positive number. Okay, so similarly, if you look at the USDX, we see that between 14th and 21, we see that they've added more to their long position to neutralize their net position. Their net position is currently short on the dollar, but if you compare the 52-week high, the 1-year high, and the 1-year low, we see that this is closer to the 1-year high than it is. That is the highest amount. This 15,000 is the highest amount of short positions they have had on in the last 1 year. Okay, and oh, sorry, this is indicating the highest amount of long position they've had on in the last 1 year. Okay, that is the lowest it had been. The highest it had been, rather, the highest net position they had. There is no. Okay, let me quickly explain. When the value is negative, it is their net short. Okay, whenever the value is negative, it means their net short. Whenever the value is positive, it means their net long. Okay, so this value that we have here now means that they are net short. Okay, this value and this value, the highest is this one. Okay, that means they had more short positions than they had here compared to this one. Okay, I hope that makes sense. Like this value here, it means that they had a lot more short position here than they had here. Okay, so that means this value is the highest amount of long position they have ever had on in the last 1 year. While this value here is the highest amount of short position they have ever had on in the last 1 year. So if we compare this to this, we see that this value is closest to this value. Okay, and this value was formed when price took out that low in that buy side sell side liquidity early in February. Okay, I'm going to show you when we go back to the chart. So they are sort of net long. There's a bullish bias on the dollar when you compare their positions in the last 1 year. And if you look at euro, we see that between 14th and 21, they added more to their short position. Okay, if they added more short position to this value, the value is going to increase. If they added more long position, it's going to neutralize it and the value will decrease. So from here to here, it means that they have added more short position, and that is why we have a net negative position. So that means they are net short, and this is a really heavy short. Okay, because if you compare this value to this value, this is at this point in time, this 52-week low, they have the highest amount of net short position they have ever had on in the last 1 year. Okay, we see that this value is closest to this value. So I'm trying to explain to you how I interpret the CO2 report. Okay, and if we look at and what happened, this is last week Tuesday, right? If we go to last week Tuesday, let's go back to the charts. I hope what I've explained there makes sense. If we go back to last week, go back to the charts. Last week Tuesday was right here. Last week Tuesday was somewhere around here. Okay, so as a Tuesday last week, they removed a significant amount of contracts from their longs. Okay, it could be profit taking, but they weren't building more position. Sorry, they removed a significant amount of contracts from their longs and they were adding to their shorts. Right? Ideally, what you want to see when price is rallying up, you want to see a steady increase in their net position tilting towards the positive side. Okay, you want to see a decline in shorts and an addition of more longs, similar to what we have on let me go back to COT. So similar to what we have on Bitcoin. Okay, you can see that all through the Bitcoin rally, what they just kept doing is they kept adding more and more and more longs. Okay, so the value gets more and more and more positive. Okay, that is what you want to see when the bias is bullish. Okay, but if you see price rallying up and you are seeing that they are removing longs and they are building more short position instead of adding more to their longs, you know that that rally is short term. Okay, and a reversal is very likely, but it's very obvious in British pound. Okay, you can see all through the rally that has been happening for the past few weeks, they just kept on subtracting from their longs. Okay, so they removed over about 12,000 contracts from February 21 up until now. Okay, so all through the rally that we have been seeing on the all through this rally, that is British pound. Let me go to the 4-hour time frame. So all through this rally that we have here, all through the rally, they kept adding more to short position, removing longs and adding more to short positions. Okay, so ideally what you want to see if the market is bullish long term is as the market is going up, they'll be adding more and more and more and more and more to their longs whenever there is a retracement. So that's why I said I am bullish long term on DXY, and we've already seen this accumulation and then manipulation at the early in February, and then we've seen this impulsive reaction, that is displacement above this high. Okay, so that's a shift in market structure. If you are using the high and not the close of the candle, personally I like to see a close, but that doesn't invalidate this as a shift in market structure. That's just a personal preference. But so, and we see that this is also an OB. This is a bullish OB, which I also outlined last week in last week's review. This is the equilibrium. This is the, let me get rid of this. So this is the main threshold of this OB from that high. We use the body. This is the main threshold. Okay, the market has not closed below this weekly fair value gap. The market did not close below this weekly fair value gap. The market did not close below the main threshold of the OB. So I don't have a reason to be bearish long term yet. Okay, the only concern I have is what I outlined here, that if this is a market maker sell profile, normally this or this would be the terminus. Okay, so this low had been taken already. If we get a drop into here, do we get a reversal from here, or is it more likely to take this low? Honestly, I don't know, but like I said, I am not anticipating that this low is going to be taken because we have this bullish OB, and this is also a long-term low. Okay, a long-term low because it has a short-term and intermediate term low to the left and to the right of it. So this is a long-term low. Ideally, the market should not even come here. Okay, based on institutional market structure. Okay, if you go back in time, you will see that when the market is bearish, long-term highs here, they don't form frequently. Long-term high here. Okay, now this long-term high has been breached, so that's a bullish signature. All right, that's a bullish signature. Ideally, you would not want to see price breach long-term highs if we are bearish. I don't want to see price breach long-term lows if we are bullish. Okay, I hope that makes sense. So if we go to the 4 hour time frame, is there anything of interest? 15 minute. So this to me looks like a potential market maker sell profile. Okay, close below this low would confirm smart money reversal. Okay, so if you close below this low, use it as resistance and then drive low. Obviously, it could still take out this high before we then have SMR. So if assuming it takes out this high, the SMR will be a close below this low, this Asia low. Okay, that will confirm a run into this area or a run into this volume imbalance. Okay, so the volume imbalance is where my attention is. So I'm looking for, once we get confirmation SMR, okay, I don't know if this high is going to be taken or not. This is just consolidation. This is not, there's nothing clear, there's no clarity in this chart right now. So we don't know if this high is going to be taken. If this high is taken and then we get a shift in market structure, then I would assume that price should be coming here into this volume imbalance. Okay, and we could see a rally into this area. Okay, we get a rally into this area. SMR, I'll be anticipating smart money reversal there to come back and take out this low, and then a long-term reversal around here. So that's my expectation for the week. Okay, personally, I think we'll probably just consolidate for the most of this week, and then maybe um at the end of the week, maybe Friday or even next week, then drop lower, manipulation, then expansion for the rest of April. So that's that. Let me go to the euro weekly time frame. So on the weekly time frame, we have this long week here. Um, price has failed to close above this fair value gap, this weekly fair value gap. It failed to close above this other weekly fair value gap as well. It also failed to close above this OB. Okay, this up close candle. So it hasn't invalidated anything on the weekly. Alright, but if we look at this, it has closed below this fair value gap. So ideally, you would expect that we should not get a close above it. Okay, but where did the market open? The market opened above it. Market opened above it. That's not good. You get an open above, ideally that's bullish. Okay, that's bullish. If you get a close above it, that's generally a bullish signature. But let's see. Okay, but in the meantime, I'm anticipating a run up back into this area. Let's go to the daily time frame. So I'm anticipating a run up into this area, perhaps even the high of this fair value gap. So I want to see a run. I want to see it maybe turn this fair value gap, this old fair value gap has passed through it. So that would now potentially be BPR. So I want to see price rally into it. It might push higher into the high of the fair value gap, this daily fair value gap. It might push higher into it before it then rejects. Okay, and it could just rally like this and then reject. Okay, so I am To start the week, I want to see the regular Judas swing to the upside. Then maybe Tuesday takes out Monday's high. Then we see a reversal. Okay, so this is a long-term high, right? Based on institutional market structure, this is a long-term high because this is an intermediate term high. This is an intermediate term high. So we have intermediate term highs to the left and right of this. So this is a long-term high. This is also a long-term low. We see our price. As we got a close below this area, okay, I would have built really heavy short position around here. But I was a little bit skeptical because we didn't get a close below this long-term low. Okay, and we got a close above this intermediate term high. Although close above intermediate term high doesn't really mean that the market has is going to change long term, but this is significant. Okay, this close above this intermediate term high is quite significant, and we had this three drive 1 2 3. That means it doesn't want to take out this low. Okay, when you say three drive like this 1 2 3, it means that the algo does not want to take the sell side liquidity that is after it. Okay, that is why they are building long, inducing liquidity, taking it, induce liquidity, taking it to rally into this area. So, but we've seen a rejection from the daily CBI, this sell side imbalance, buy side inefficiency. This is a bearish OB, okay, and price has rallied into the main threshold, and we saw this quick rejection. Alright, so I'm looking to see will it turn this fair value gap into resistance for lower prices, or could it push higher again into the 1 day, the high of the daily fair value gap. Okay, will it push higher? That would also be the consequent encroachment of this week. Okay, before we then say rejection. So anywhere around there, I'm just anticipating the weekly Judas swing. Maybe on Monday we say rally on Monday, and then Tuesday takes out Monday's high, and then we say rejection. So the classical short term trading, one shot, 1Q model. That's what I'm looking for. That is my model. That's what I'm looking for this week. Okay, so I'm just waiting for Monday's range to form. Then I would see how the market is going to look like on Tuesday. So let me check the 4-hour time frame. So on the 4-hour, we have what looks like a potential market maker sell profile. Okay, all of this, okay, that's why I said the market is constantly moving from market maker buy to sell model. Okay, this all move from here, rally up down into here. This is a market maker sell profile. Okay, this move from here like this. This is a market maker buy profile. Okay, when the market is moving into an area and you draw on liquidity, it starts with this initial consolidation, and then you see rally into it, and then sometimes it's come back to retest the initial consolidation before SMR. So what I'm looking at, this whole area is consolidation. We've had a move away from it. Okay, so that is so I'm anticipating smart money reversal, or should you say smart money reversal has already happened? I'm just going to be watching the daily fair value gap that I mentioned here. This inverted fair value gap. Okay, so market has closed below it. Ideally, the market should then use it as support, I mean as resistance for lower prices. Okay, so that's what I'm anticipating, but I'm also allowing room that it could potentially rally into this area, okay, before it rejects. Okay, so we have this volume imbalance here. That is also going to be a draw on liquidity. Okay, if we are bullish, ideally what I would want to see is turn this area into support for higher prices. Okay, but I have a bearish bias. Okay, so what I think is likely going to happen is we'll probably consolidate for the rest of this week. Okay, that's what I think would happen. Probably consolidate a bit, then maybe we now get a run above this area, then rejection. Okay, so I'm not, like I've showed you from the CO2 report, I am not anticipating higher prices. Okay, this is a long-term high, right? This is a long-term high, although no long-term low has been validated yet, but eventually I think we're going to get close below this low. And the reason why I'm bearish long-term on EU is because I'm seeing this as a potential market maker sell profile. Initial consolidation here, run into resistance, smart money reversal, when price broke below this area, or this could also be used as smart money reversal because that's the only intermediate term low we have here. No, I think this is an intermediate term low. I think we have an intermediate term. Oh no, we don't. So we don't really, from an intermediate term perspective, we don't really have SMR yet. SMR will be a close below this intermediate term low. That would validate a run into this area. Okay, so that's what I'm anticipating long term. Okay, I don't think we are going to continue to the upside like this. I just don't see that. Okay, like I said, the reason why, if we get a close above this high, then that would indicate a bullish momentum going into the year. Okay, because this is a long-term high. Ideally, you don't want long-term high to be breached. Okay, when the market is bearish. Okay, if you look through the previous price action, you would see a single place where long-term highs were breached. The long-term highs are the solid. Okay, I created an indicator to mark them out. Okay, so this is a long-term high, this is a long-term high, this is a long-term high, long-term high, long-term high, long-term high, long-term high here, long-term high. So generally, long-term highs, the algo would not breach them when the long-term bias is bearish. Okay, and for long-term lows, if the bias is bearish, you want to see long price aggressively breaking through long-term lows. Okay, just like we have here, aggressively broke through. Look at the candle. Okay, you can see how, no, this is not a long-term low, this is a long-term low. So we want to see aggressive break. We want to see price aggressively break through long-term lows. It's a long-term low, break below it. It's a long-term low. We want to see price break below long-term lows. It's a long-term low here as well. Aggressive break below. Okay, so if you are bearish, you want to see price accelerate through long-term lows and then return back to use them as resistance, like we have seen here. Likewise here, close below, use it as resistance, sell off. Okay, so that's what you want to see when the market, if you have a bearish bias long term. Okay, so what I want to see is price drop lower, use this area as resistance to continue the sell off. Okay, but that's, no, maybe I'm getting a little bit ahead of myself, but my only concern is this intermediate time high, because that is a shift in market structure. Okay, price took liquidity, broke above this intermediate time high, closed above it. So generally, the retracement, you would want to see a bounce, okay, for higher prices. But let's see. Okay, so in the meantime, I'm anticipating bullish price action to start the week. Judas swing to the upside, and then I'll look for shots around here to target this volume imbalance, and I'll wait to see if it will be willing to turn this into resistance to attack this sell side liquidity here. Okay, so GU is pretty straightforward as well. I'm anticipating market maker. Let me go to the weekly. Is there anything of interest? So on the weekly on GU, we see that the fair value gap price still did not close above it. Okay, so this fair value gap is still yet to be invalidated on the weekly, but this one has been validated, but this one has not been validated. We have these relative equal highs here. Okay. Price take out the relative equal highs. I have this volume imbalance here. Go to the daily. So we have this initial consolidation. This is like a market maker buy profile. Okay, initial consolidation run to support smart money reversal, low risk buy. Okay, this should be the next leg of accumulation to run this high, ideally. So that could be, that's a strong possibility. Okay, the reason why I have not really been leaning to the possibility of having a run above this high again is because of this long-term high. Okay, like I said, can this is a long-term low. The market has breached it. Okay, this is a long-term low as well. Market has closed below it on the daily. So ideally, you don't want to see price go above long-term highs. Okay, ideally, that's what long-term highs don't form often. Long-term lows don't form often. Okay, they form long-term. You can see all through this price action here, this is the only long-term low that formed. Okay, after this long-term low, this is the next long-term low that's formed here. Okay, so let's see what happens on Monday. But in the meantime, I'm not really looking for this high to be taken, but we could get a much more higher push into this area, because if we go to the lower time frame, we would see this. I think it's cleaner on the 4-hour. Okay, we have all these highs right here, this trend line liquidity. So it could potentially rally up, take out the trend line liquidity and still not take out this high. Maybe form another equal high before it then rejects. Okay, but I'm not so excited about the price action on GU. This is a daily OB. Okay, market has already traded below the low. This is a bearish OB. We get a run into it and then reject from there, or does it want to run these highs? I think that a run above that high is a strong possibility, because right now this is looking like a bullish price action. So if we get a close above this area, for me, I'm just going to wait till I get a short sell up. I'm not interested in taking longs because I'm not absolutely certain that this equal high is going to be taken. Okay, but that is a very, very, very strong possibility. So I won't be interested in taking a long into that area. I'd rather wait for price to rally into it and wait to see if price is going to rally into it and then build short position. Wherever I say short position, I'm going to take it. Okay, and my entry trigger is pretty simple. I just simply wait for price to close on the 5 minute time frame. I wait for price to close below intermediate term low and I enter the fair value gap at the breaker that it forms. Okay, so pretty straightforward. That is that for this week. So if you have any question, feel free to drop in the comment section and in the Telegram channel.